All right, let's jump straight into this explainer and look at exactly why Roche, after literal years of trading sideways thanks to the dreaded patent cliff, is finally signaling that the wait for investors might just be over. For the past few years, Roche has basically been a story of extreme patience. You held the stock, you collected your dividend, and you just waited. Waited for the next big thing while the company battled the headwinds of losing exclusivity on its older, legacy blockbuster drugs. But looking at the data we have now, I'm here to argue that this painful waiting period has effectively come to an end. We are witnessing a massive, fundamental shift in Roche's entire narrative right now. They're actively transitioning from being this defensive giant, one primarily focused on just protecting its shrinking legacy revenues, into a fiercely offensive growth story. And this aggressive new posture, it's completely powered by what is shaping up to be one of the absolute most exciting drug pipelines in the entire pharmaceutical sector today. So, here is our roadmap for today. First up, decoding the financial numbers. 2, exploring the new growth engine. 3, valuation and market sentiment. 4, key risks to consider. And 5, the final verdict. Section 1, decoding the financial numbers for the first half of 2026. Now, there's a really interesting story hidden beneath the headlines, right? And it perfectly illustrates the illusion versus the reality of their finances. At first glance, reported sales show a 2% drop in Swiss francs. But that is entirely a currency effect, thanks to the massive appreciation of the franc. The true underlying operational health, what we call constant exchange rate sales, actually grew by a very solid 6%. This tells us their commercial execution on the ground is working exactly as intended. And that brings us to 30.36 billion Swiss francs in group sales for the half year. While those currency headwinds definitely compress the reported number, especially for a company generating most of its revenue outside Switzerland, management hasn't blinked for a second. They've confidently confirmed their full year 2026 outlook for mid-single-digit group sales growth at constant exchange rates. They're seeing right past the currency volatility, and honestly, as investors, we should be too. Plus, beyond the balance sheet, their physical expansion puts their money right where their mouth is. Just recently, Roche's U.S. subsidiary, Genentech, announced a massive $750 million investment in a brand new manufacturing facility in Oregon. This means high-wage jobs and critical infrastructure for advanced drug delivery devices like auto-injectors. Combine that with a new North Carolina facility for obesity treatments, and the message is crystal clear. Roche is betting heavily on its future pipeline and gearing up for massive manufacturing demand. Moving right along to Section 2, the new growth engine and pipeline catalysts. For the longest time, the huge question hanging over Roche was, well, what exactly comes next after the big 3 cancer drugs? Well, the answer is finally here. First, and absolutely most importantly, we have Giredestrant. This is a drug targeting a highly common form of breast cancer, and it has completely rewired how analysts view this company's future. The Phase III data for this drug showed clear superiority over existing inhibitors on the market. It proved it's not just a replacement, it's a massive upgrade. And expectations have shifted drastically based on that data. Previous market consensus actually capped peak sales at about $6.6 billion. But Morgan Stanley just recently issued a huge upgrade, projecting peak sales to reach up to 9 billion Swiss francs. I mean, that is a total game changer. 9 billion Swiss francs. Let that sink in for a second. This is exactly the massive growth engine Roche desperately needed to rapidly offset the patent losses on those older drugs and finally pull the company out of its defensive crouch. And the best part, we don't have to wait a decade to see this play out. We're actively anticipating 2 major U.S. FDA priority reviews for Giredestrant in late 2026. If these lead to approvals, and honestly, the data strongly suggests they will, that serves as a massive, immediate catalyst that will completely jolt the stock price. But hey, Roche isn't a one-trick pony. They've built a really deep, diversified safety net. Let's do a rapid-fire look at the rest of this pipeline. They're advancing a drug called Afimkibart for ulcerative colitis, which carries peak sales estimates of over 3 billion Swiss francs, all on its own. Next up, consider their Alzheimer's treatment, Trontinemab. The market potential here is just staggering. We're talking greater than $5 billion. Now, tackling Alzheimer's is notoriously difficult, but the sheer size of the addressable market makes this an incredible lottery ticket embedded right within their broader portfolio. And perhaps most critically for current market sentiment, they're aggressively entering the incredibly lucrative obesity space. Positive Phase II data for both Petrelintide and CT-388 positions them as real, heavy-hitting competitors in the GLP-1 market. Having this diverse basket of opportunities spanning cancer, neuroscience, and obesity, it drastically reduces binary risk for investors and provides multiple upside drivers. Section 3, Valuation and Market Sentiment. Let's look at the analyst views. So we have the growth engine, right? Let's ground all this excitement in the numbers that actually matter to you. Looking at 2027 estimates, Roche trades at a price-to-earnings ratio of 15.5x. Now, yes, that's a slight premium to its European peers, which might seem kind of counterintuitive for a company recovering from a patent cliff. But it is entirely justified because of the maturity of that pipeline and their significantly lower growth risk going forward. The consensus among 18 analysts is a solid buy. The average price target is sitting around $364, with highly bullish targets stretching all the way up to $434.50. So we're talking about significant upside from current levels. And we absolutely have to highlight this major institutional signal. Morgan Stanley officially upgrading the stock to overweight with a 410 price target tells the broader market that the smart money is shifting its stance. The era of let's wait and see is over. The strategy now is firmly accumulate. And while you wait for those massive pipeline catalysts to fully mature and reflect in the stock price, Roche offers a highly reliable dividend yield. For income-focused investors, this acts like a really comfortable safety net. It provides a solid floor for the share price, so you literally get paid while this turnaround story unfolds. Section 4, Key Risks to Consider. Let's talk downside factors. Look, no investment explainer is complete without taking a hard, objective look at the downside. So what do you really need to consider before taking a position here? There are 3 major hurdles Roche has to continuously clear. First, pipeline execution. The entire optimistic thesis relies on these clinical trials actually succeeding. Second, the patent cliff. Yes, they have new drugs, but these new ones have to scale incredibly fast to plug the massive revenue hole left by expiring legacy patents. And third, currency volatility. A continued rally in the Swiss franc will just keep obscuring their underlying strength and could very easily spook short-term investors. I really want to focus specifically on that first point for a second, pipeline execution. Drug development is inherently risky. Science is hard. Just look at the previous disappointment with the Persevera trial. It's a harsh reminder that a negative data readout, especially if, something were to happen with their flagship drug, Giredestrant, that would be a heavy, heavy blow to the stock. You have to be totally comfortable with clinical risk. Section 5, the final verdict. Is Roche a buy? When we take the financial realities, the incredible pipeline, the valuations, and those clear risks we just laid out, the verdict is that Roche is an incredibly compelling turnaround story. It is your classic quality compounder. You're getting the safety of a defensive healthcare giant combined with aggressive growth catalysts that the broader market is really only just beginning to price in. Despite the currency and clinical risks, the immense potential rewards and recent institutional upgrades make this a very strong buy for anyone with a medium to long-term horizon of, say, 12 to 24 months. Which really just leaves us with one final provocative question. Is the wait for Roche's next big breakthrough finally over? The data certainly points to yes. This powerful new pipeline is finally ready to eclipse their historical patent struggles. Thank you so much for walking through this structured analysis with me, and I really hope this clear view of the data helps you make a far more informed decision regarding this fascinating pharmaceutical giant.